Good afternoon, everyone. Oh, have we gone live?
I think
Go
so.
live?
I think we're live. I just realised I'm on the left today, or the
I
right
know
side.
we've
We swapped
changed
sides.
it up. Let's have a look. It looks like the broadcast was deleted on Facebook. Matt, you might need to talk for a minute. For some
Oh,
reason, I don't know what's happened there. I know we are live, so hello everyone. Good afternoon.
oh yeah, it's not on Ecom, is it?
Yeah, so I don't know if we can
Hang on.
push it out.
Broadcast was deleted. Have we not been banned again?
Oh my god, don't. Let's just have a quick look.
No.
If you're watching via the Amazon Entrepreneur Group or via YouTube, just let us know that you can
Hang
see
on.
and hear us. Okay, right. I'm going to leave you up to sort that out. You should be able to add it afterwards. I think it just needs to be reconnected. Hi guys. So hi Yvonne. Hi
Someone's on
Julia.
Facebook. Is that the other group?
Yeah. So it's ecom that it's the
Yeah,
problem. It's not showing.
Oh, come on.
Hi guys. Yeah, we're on the wrong side of the screen. Blowing the mind, definitely. Hi, Jessica. All loud and clear. Appreciate that. Right, I'm going to let Matt fix that. So, how's it all going, everyone? Let us know in the comments. How are sales going? Things seem okay at the moment. Has anybody started to get that kind of Easter push? I think in reality, we're probably looking towards the end of the week when the kids break up. That's when the Easter sales really start to kind of take place and kick in. So,
That worked.
is it working? Is it working? Go live? No, I think it needs to be edited.
Yeah.
Due to an issue on Facebook. Okay, guys. If somebody wouldn't mind, well, Matt, if you wouldn't mind doing it, maybe drop the YouTube link in the ecom group. For some reason, it's not allowing us to go live in that group. So,
I think it's
John.
to do with the daylight saving, maybe.
Oh, it could be something. Something could have gone out from that moment. So yeah, if you just
No, it says GMT +1, so that's the right time, isn't it?
yeah, I'm not sure. I'll let you guys sort that out. Hello.
Right, I'll post on Facebook now.
Okay, I'm going to jump into the Amazon Entrepreneur Group to see who's saying hello. So fingers crossed. What group are we live in? There we go. Yeah, that's right. So hi Jay. If you want to say that we're either live in the Amazon Entrepreneurs Group or on YouTube, that'll be good. So fingers crossed. Hi Paul. Hi everyone. Hi Paul. I know you've dropped me a message. Haven't had a chance to look at it this morning yet, but I will after this. So yeah, let me know how are sales, how are things going. I know it's probably freaking you out that we're on the wrong side of the screen. Didn't have time to swap that over. But yeah, I think, like I said, generally when we start to see Easter sales kick in is when those kids kind of break up. Essentially, that's when people start, having that sort of shift of starting to think about things and, getting that process kind of changed over. So it'd be good to hear if people are in the same sort of place. Last week, we spoke quite a lot about, that kind of mindset shift about building businesses and what areas of focus that you guys are going to be focusing on in terms of building the business moving forward, taking into account a lot of the market changes and things like that. So it was quite an interesting session last week. If you haven't watched it, go back and watch it. It was just me rambling on for an hour, just talking about, some of the key points, definitely when it comes to, I think some of the things that have changed over the last couple of years in particular. But what's going on in your businesses? Let me know in the comments just while we're waiting for Matt to sort out our kind of technical issues, essentially. Is anyone experiencing? I saw this in another group, actually. I think it was Hayden that was talking about it. And I saw it was affecting quite a few people. Has anybody started to experience clawbacks in terms of lots of refunds or clawbacks for reimbursements that have already kind of gone through? Let me know if that's something people are experiencing quite a lot of at the moment, because it seems to be, yeah, because I think you were talking about it as well, Matt,
Yeah,
weren't you?
it's really common this time of year because what
Yeah.
happens, if you think about it logically from Amazon's point of view, Q4's crazy, loads of stuff comes in, it's a bit of a mess. So Amazon loses stuff. It's just inevitable. I'm sure everyone's who has a warehouse, their Q4 warehouse is pretty crazy, a bit of a mess maybe. So Amazon obviously give credits after a set amount of days, but then of course as the quieter periods roll in, I think especially at the moment, because I don't know if you've heard in the news, there's a lot of layoffs and things. Amazon are probably thinking, right, we've got all these surplus staff. Let's get them on finding all these pieces of stock that we know are in a warehouse. We just don't know where they are. They're finding them and they're crediting the stock back to sellers. And then obviously that's why they're doing the clawbacks as deductions from inventory. A, because it's a quiet period of time. And B, I think they've got surplus staff at the moment.
Yeah, absolutely. So it's something that you can expect in your business for sure. We've got Lace and Needle. I watched a webinar last week for the first time and it was great. I came right back. Well, welcome back. Thank you very much for joining us. Really do appreciate it. Today, we want to talk a little bit about, general kind of Amazon practices, some of the things that are, hitting the headlines this week, essentially. And I think, like I said, those clawbacks, lots of reimbursements. And I don't think that's something people realize, because I think, the majority of sellers probably think that once you get a reimbursement, that's it, it's done and dusted. But absolutely not. If that stock is recovered by Amazon, they want their money back and they're going to take it.
Yeah. Because as well, they essentially, they overpay in most reimbursements. They give you the basically the sale price minus their fees, which is effectively really an over reimbursement because you're getting your profit out of that item. In most other kind of cases, if in any kind of like 3PL, you usually just get the value of the stock back. If you pay £10, you'll get £10 back. Or maybe if there's all the costs directly associated, you won't generally get £20 minus fees or £25 or whatever it is as your sale price. So definitely keen to get their money back as and when they can.
Yeah, absolutely. So don't ever think that, it's going to be a case of, it's done and dusted. So, and they tend to come through in big chunks as well, unfortunately, because if they're going to find all of it, they're going to, it's going to come through. Generally, they'll give you individual reimbursements. But if they find a box, you got to think it's like the whole value of the box. Potentially it's going to come back. I don't know how they do it. I don't know if there's someone in the Amazon accounting system, essentially, that maybe sort of like says, right, because I don't know if they actually find your stock or whether or not they do find like a surplus of stock and somebody like a pencil pusher is allocating. I don't know. What do you reckon?
I think it depends. If you're using the FN SKUs, you label everything yourself, then my understanding is they cannot credit other stock. But if you've got commingled inventory, then 100%, they're probably just going to pull random stock from somewhere else. You might end up, they might claw back your refund and then give you somebody else's stock, and then they keep their refund. I don't know how they would ever be able to administer commingled inventory, because there's no way to identify which piece of stock belongs to which seller, which is one of the problems really of the program.
Yeah, I think that's the thing. It's definitely a case of, never commingle if possible, because it's not just a case of, potentially being issued stock that could potentially be fraudulent or something like that. It's to do with reimbursements and other different types of thing as well. So it's definitely better to be adding those FN SKUs if you can, guys, which I know is a bit of a Billy Basic thing to do, talk about, but there's lots of consequences for different things. So always, always, always be as diligent as you can in your business. You don't need any excuses for Amazon to take money off you, because they'll do that on their own.
Do that perfectly well of their own accord, yeah.
Absolutely. So, hi guys, apologies, we've had a little bit of a technical issue. One of our Facebook groups is not working, so fingers crossed you guys have found us on YouTube. Hopefully you have. Any questions, just drop them in the comment as we go along. But one of the things I wanted to talk about in particular today is linking on a little bit from last week, we were talking about the difference between kind of side hustle and, building a business, and that kind of mentality between the two. Well, I think following on from that, there's a couple of decisions I think people make in their business where they struggle to separate themselves from their business, essentially. And that generally works around things, financial decisions, investments, etc., things like that. Because if you are essentially a real business, and I say that very, very loosely, sometimes we make decisions based on us as the person, but when in fact it should be a business decision. So a perfect example of this is getting into investment in terms of I don't know, say for instance coaching. Say, for instance, your business is doing okay, but you want to take it to the next level. Okay. And the way to do that is to get like a mentor or something like that. Now, it may well be that your business can afford a mentor, but you're looking at it from a point of view, I can't. Okay. Because it's a level of investment that you need to make into your business. Now, that's just an example, but there will be lots of valid, investment decisions that you make, or various different decisions to invest in a certain type of software or something like that. And what happens is you tend to make a personal decision, but should be made from a business point of view. So I want to talk about some scenarios like that and how you can kind of work through that and make your decisions based on your business as opposed from a personal point of view. Does that make sense?
Yeah, it makes sense. I mean, actually, it's really ironic that we I don't have any mentoring at the moment. I have had mentors in the past, but two of my staff are actually currently on business development courses themselves. Obviously, I've funded, so that's a clear investment decision that's been taken by my business for my business.
Yeah, absolutely. So let us know in the comments, guys. Is there any point in your business over the last 12 months when you've looked at something and you've made a personal decision based on, oh, I shouldn't do that because of this? And it's not just generally investment, but it's also things like, it's developing and separating you and your business are two different entities. Right? You as a person and you as your business are two different entities. And you need to get into the habit of making business decisions based on your business circumstances or the future of your business and the difference between you as a person. Because me and my business are two different things, right? And me and my business don't think the same ways sometimes. Something I would want to do personally, I may not do it from a business point of view and vice versa. So you need to learn to separate the two. And the more that you are in business, so this is going to be a struggle, to comprehend possibly a little bit for people that have been, in business slightly less. Okay. So the more newer you are in business, then this is something that you may not have even thought about this perspective before. The longer you are in business, because I'll be completely honest, when you look at perspective and how you look at something, whilst I would never sell training or courses or anything on this basis, but if your business, I've had people say to me in the past, oh, I can't join this or I can't do that because, I can't afford it, whatever. And one of my first questions would always be, not that I'm in the habit of persuading people to do something. I think if you don't want to do that, it's entirely up to you, obviously. But, the business can't really afford it. Okay. Does your business make profit? Yes, it does. Okay. Is your business, well, that means you're going to pay tax on that profit. So therefore your business can afford it, because otherwise the money's just going to go to the tax man anyway. It's going to go to the HMRC. So that's a crude example of whether or not you should be making a personal decision or a decision based around your business. Because if you're just going to pay that money directly to the HMRC anyway, albeit in 20 12 months' time, so this is the other aspect that you need to look at it. Okay, that's fine. Yes, it would be going there, but is the business cash flow rich at the moment? If it is, fine, make an investment. If it's not cash flow, then no, you shouldn't be doing it because you need that cash flow to keep the money flowing elsewhere. So do you see what I mean by that? It's something that there's always cause and effect. Those are the type of decisions and logic you should be running through, as opposed to, I can't afford it.
Yeah, totally. Totally agree. It's a really interesting concept. I think people really struggle as well with separating out. I think it comes down to value as well. For example, we put in Lindworks, which is a damn expensive inventory system. Now, over the cost of the contract, it's going to cost me £48,000. Now, as an individual, I would never spend that much money on a piece of software, but it's a business investment, and like you say, it's going to take my tax bill down. It's not the reason I did it, but it is a decision in the investment. And a lot of investment in our business actually comes in March and April, either at the start of the year, so we've got the time to recover the cost, or at the end of the year, so we can offset it against the previous year's profits. You may have noticed on Facebook, I've bought a new car. Now, that isn't coincidental. My financial year ends 31st of March. Now, there's quite a financial decision that was made in purchasing that vehicle. It wasn't just I want a new car. It was an investment decision of, well, yeah, I might as well get a new car because there's profit, so let's just buy a new car, kind of thing. So a lot of decision making happens at certain times in the year, and the amount of money that you spend potentially can be eye-watering. But what you do is you reduce your tax liability, and then in order you invest in your business, which will make it grow, invest in your team, invest in your processes, and then hopefully you're going to make a bigger return in the future.
Mm-hmm. Absolutely. So there are lots of different things that you can adopt into your business where strategy comes in more than anything else. You know, do you need a new laptop in your business? Are you ready to buy one? Well, hang on a sec. Before you make that personal decision, which might be, okay, I want to go and buy a shiny new laptop. Well, you might be better off waiting 6 weeks until you go into your new tax year before you see the benefits, or buying it earlier, or not waiting. You know, there's lots of different type of elements that you need to start thinking about from a slightly different perspective, that you can maximize the things that people get in real businesses to be able to extend on certain things. So like, you know, whether or not, like I said, we've got some. Oh, Andre said, are you hiding from me? I keep missing these. We've had a problem with Facebook, Andre. So you found us. We're not hiding, I promise. You found us on YouTube. But yeah, we had a problem with Facebook. So for some reason, one of the streams isn't working. So apologies for that. So used electric cars lost 18% in a year. I don't really know what that means. I mean, I don't maximize stuff like that. I know. Actually, Matt, do you want to take the opportunity to just quickly talk through the electric things? I know you've got
quite a bit of a thing on electric cars. So if the reason to buy an electric car through a business, now I'm talking about just through a business here, which is where most people who have electric cars own businesses, it's because when you buy an electric car, now it's got to be new. Okay, it can be classed as new, so it's like an ex-demonstrator, but it can't be a used vehicle. It's got to be a new vehicle. You've got to be the first owner of the vehicle. You can get a 100% corporation tax write-off against the value of the car. So you can write off 100% of the corporation tax of the vehicle. Okay, so let's say I've made 100K profit last year. Okay, I'm going to pay, I think it's still 22%. I think it's going to 25% next year. I think it's 22. Correct me if I'm wrong anyway. I think it's 22%. Corporation tax. So I'm going to pay 22% tax. So I'm going to pay 22 grand in tax. If I buy a 40K electric car, I have written off £22,000 worth of that tax as the corporation tax. I don't have to pay that because I've spent it on the vehicle. So effectively, the car is nearly half price because I've saved £22,000 worth of tax that I would have had to pay that and now don't have to pay if you're buying this vehicle through the company. Now, of course, when you buy, you can do this with a petrol and diesel car. But with a petrol diesel car, you have to pay what's called benefit in kind tax. Now, you do have to still pay this with an electric vehicle, but it's currently 2%. So basically 2% of the vehicle's value is taxed to you personally every year as a benefit of running that vehicle. So for me last year, I paid like £320 as a benefit in kind for that vehicle. Obviously with petrol and diesel, I think it's like nearly 26-27%. So it doesn't make financial sense to do it with petrol and diesel, but you can still do it with petrol and diesel vehicles. But it's better to buy them personally because you're not making a saving. But particularly with electric vehicles, this is why people are buying them in the droves who own companies, because they're effectively getting a 40 grand car for nearly half price because they're writing off the corporation tax. And it's 100% one time. It's not like you then have to pay the tax when you sell the vehicle. It's a one-time tax write-off, and you never have to pay that again. So it's part of the investment decision. Yes, I understand electric cars lost a lot of value. I'm still quids-in, having sold mine recently. Yes, I lost £15,000 on my old Tesla I sold 2 weeks ago, but I still made more of a saving by through the corporation tax overall. And unfortunately, it's a wider market issue in terms of the price of cars as a whole because of COVID. It's not just electric cars specifically.
Yeah. Okay, cool. Because I know that that's something that and I'll be honest, I still don't know if I get it 100%, but I'm not an electric car owner. I'm not likely to be at any point in the future. Because I would forget to charge my electric car. I would be one of those ones that gets that range anxiety or whatever they call it. So Andre says still in profit. Nice. Absolutely. So yeah, thanks for explaining that. So let's just have a quick look. This is Sean. Let's put this up. It says 19 to 25%.
Is that this year or is that next year? I've not looked at this year because I know obviously it's all changed. I think that's from next year, isn't it? I think that's from the new financial year 2023, beginning 2023.
And I think this is the important part, and this brings into it as well. You know, if it's this year, if it's next year, again, all part of these kind of business decisions that you make, you know, strategic decisions that you make within your business to ensure that you're doing the right things at the right time. So Sean says the more you make over 50,000, the rate starts to increase. You start paying the full 25% corporation taxes. You go over making 250 plus. UK government said only 10% of UK limited companies will be paying the 25%, apparently.
Yeah.
Well,
yeah. So currently, correction. Currently, it's 19% this year. But from April 2023, so next week, it's going to be increasing from 19 to 25% for those, as Sean said, who are making over 250,000.
Oh, yeah. Well, I do. But then saying that as well, another thing you've always got to take into account, because we tend to work so far behind as limited companies and corporation tax and things like that. Sometimes by the time you get round to the time when they say that changes are going to take place, there might be like a new budget that steps in, something might have changed, there might be a new government. I mean, let's face it, how many prime ministers have we had over the last sort of 12 months anyway? So there's a lot that's kind of changed. So whilst there are certain things that need to be based on, you know, future decisions, but the future decision is not always guaranteed. You need to look at things strategically and not sort of like one sort of box ticks all, essentially. So that's, you know, what today is about, kind of encouraging you to think, encouraging everyone to think, I hate the word outside the box, but more laterally, I suppose, as opposed to looking at something across the whole.
Yeah, definitely. I think with investment decisions, people probably looked at my car and thought, what on earth he bought a Tesla for? It's stupid. The battery's in this and it's slow and doesn't have the range. But I think when you work the full investment decision, I think people appreciate it makes a lot more financial sense to do things in a certain way.
Mm-hmm. Definitely. I've just got the Ant and Deck comment. I thought, what is that? It's because we've swapped sides.
Swap sides, yeah. It should be Deck and Ant, shouldn't it? Rather than Ant and Dec.
Yeah, I think it is free. I thought, what has Ant and Dec got to do with like corporation tax or anything like that? And so yeah, I've literally just got it. It's the right side of things. So what are the things more people are going to Dubai? Cough cough, lol. Yeah, I think it's but then even that's changing, isn't it? You know, they're implementing more rules there. It's not going to be as easy to be able to run. Well, it's going to be as easy to run businesses, but you know, there's always the case. I remember this a few years ago with the Republic of Ireland, you know, encouraging businesses to set up there because they would get certain tax breaks.
Yeah.
But it was only for a certain period of time. It's the same with Dubai and places like that. After a period of time, that you know, they want their pound of flesh.
Yeah, that's 100%. Yeah. Again, going back to the electric car thing, it's a now thing. It's not going to be forever. You know.
Yeah, because everyone's going to have them.
Everyone's going to have them. They're going to stop it. There's an incentive at the moment. So I can't put a finger on it. I'm going would probably say 2025. By that point, it's probably going to not be a benefit anymore.
Yeah. Well, I think what's the year they're not going to sell anymore, which personally I think they're going to change. I can't see
the sale of new petrol diesel cars is banned.
Whereas I just don't see the infrastructures in place at the moment. I mean, I'm not saying that there won't be some sort of quick burst or something like that, but I do think that I think they'll end up extending that a little bit, like, you know, or backtracking, or it depends who you've got in government at the time, and you know, all of these different things. But you know, base your decisions based on what works for you now, and then make that secondary decision of, okay, so I'm looking at it from that point of view. Yes, I am going to pay tax on that, or I'm going to do this, or it would be better if I do it like this. But what's the immediate effect? You know, could I afford to take up that cash flow at this moment in time?
Yeah. And that's another good thing to consider as well is, again, I keep referencing this Tesla example, but I did put some on finance and it was a cash flow decision. It was a decision that, yes, I can afford to buy this for cash, but if I do that, I'm paying 7% of the finance because it's gone up a lot, but you know, that's going to cost me less because the money I have, if I reinvest that into stock, I will make 20, 30% ROI. So it makes more sense for me to borrow that money against the vehicle and then reuse my cash, because at the end of the day, cash is so important in a business. And it should be really, really considered before you make any kind of investment is, you know, have I got the cash to do this? Am I using the cash in the best way possible? A lot of people make a lot of cash and then go, I'm going to go and buy a house. Well, my question to you is, if you do that, are you getting the best, like a buy to let, I'm talking about here, not for a personal house, but are you getting the best return out of your cash? You know, if your aim is to diversify your portfolio and your assets, then that's fine. But if you're looking to do it from a purely return on investment point of view, how much more would you make if you invested in stocks on Amazon?
Yeah, absolutely. So it's all these different types of things. And when you're a small to medium business owner, like if you were working for, I don't know, JP Morgan, you know, or someone like that. I mean, it's a bit of an extreme example, but if you're working for a company like that, they've got a team of people, like hundreds of people, that make these strategic decisions when to buy stuff, when not to buy stuff. So when you are an entrepreneur, when you're a small business owner, you know, depending on where you are in your business, you need to put so many different hats on. You know, you need to be managing director, you need to be chief, you know, financial officer, within your business. It's not just a case, and this links into very much what we were talking about last week with not getting confused between you and this, not trying to grow a side hustle, grow a business. It's all linked together. And, you know, it's not just a case of I'll buy a few things and flip them on eBay. Yes, of course, you start out, but there's certain roles that you need to adopt within your business as you move forward. You know, you need to start thinking about kind of strategic thinking and things like that. And if you've not gone down that route before, obviously you can watch stuff like this, but that's when you need to maybe invest in some education that's going to give you not, you know, it's going to give you that extra bit of, extra advice. You know, we don't advise on, you know, tax things or things like that. You know,
because everything is dependent on your personal situation. We're just talking very broadly here. Yeah.
Yeah, absolutely. But it doesn't cost a lot of time versus money situation to, you know, read a book on something like that. You know, yes, it might not be, but it will give you a little bit of a grasp of understanding. It might make you just make that slight kind of mindset shift or something like that, where, okay, I was thinking about this as Natalie, but now I need to think about this as the business. Kind of thing. So that's what we want to start talking about and start helping you make those decisions based off, because it's a big balance. And you've got to make sure that you're getting that balance right. Now, overall, in the grandest, you know, the broadest scale of things, this is how I look at business. If somebody asked me to take it back to Billy Basics, the way I look at things is you've got to win more than you lose. You know, in business, that's what it comes down to. And it may well be 51% versus 49%. You know, the better that you get at it, hopefully that 51%, you know, increases. But the overall idea is to win more than you lose. And I think that's a mature approach to business, because sometimes, and especially when I'm talking to people as well, you know, it's all about how you look at things. So selling is very underestimated in this part of the business. Most of the focus goes on sourcing, but actually, in reality, the most important part is the selling of it. So that's where you need to spend a good majority of your focus, is to be put into the selling side of it. Don't take your eye off the ball on the selling side of it, because it comes with automation. We have repricers and software and things like that. But in reality, you know, we shift our focus and we put our focus in the wrong areas. And again, that's a business decision that you need to think about.
Can I give you a really good example of this? It took me ages to get my head around. So I'm sure everybody at some point has either been scammed or stolen from on Amazon. So you've had a customer who said an item's not arrived, you know full well it's arrived. They've returned something that's not right, that they shouldn't have, or, you know, they've you know, some kind of card fraud or something. I'm sure everybody's had some kind of negative experience during their selling. Now, the individual decision is, I'm going to get this person. I'm going to spend hours. I'm going to chase them down. I'm going to take them to court. I'm going to get my money back. Their order might only be for $12.99, but of course, it's the principle. That's the personal element. The business decision, though, is here is right. I've lost this money. But if I spend my time working on this, you know, turning this loss into a win, how many wins am I missing? If you spend 5 or 6 hours of your time trying to chase $12.99 for a customer because you don't like being ripped off, how many wins are you missing? How many sourcing opportunities are you missing? How much selling are you missing? You could have missed 5 or 6 wins there. So it's really important to know that sometimes in business, you are going to lose, accept that it's a loss, and then focus on increasing the number of wins to compensate for that loss, rather than trying to chase and win every single time, because it's just not possible. Well, it is possible, but you'll be missing loads of wins because you spend your whole life fighting people for $12.99 on Amazon because they said no, it hadn't arrived.
Yeah, absolutely. But also, to play devil advocate, is you can't continually also have that compounding effect of losses as well. I mean, like I said, as long as you win more than you lose, that's absolutely fine. But there are certain things, where's that limit? You know, yes, we don't chase $12.99, but do we chase $112.99? You know,
everybody's got to have that limit. Yeah, of course. There's got to be a point where you made that decision. For me, we had a £3,000 loss, and for me that was unacceptable, and we're taking that to court with Amazon. So we are chasing that, and £3,000 is a lot of money. £300 is probably something. In fact, the biggest I've ever rolled over on was £700, because the amount of effort to chase that and pursue that would have been cost us more than £700.
Yeah, absolutely. So you've just got, again, business decisions. This is what you've got to sort of separate yourself personally from, in terms of making that important business decision. So just go through a few of the comments here. Sean says, yes, it's still cheap, but the cost of living is higher in Dubai. So when I save taxes, I'm better off having to spend it to live in Dubai. It's for the big players who are paying way too much in taxes. So yeah, again, that swings and roundabouts. There's always a trade-off. That's the way that I look at it. There's always a trade-off. If you want to live in paradise, then it's probably going to cost you more because the cost of living is higher, because they don't produce anything, all of these different types of things. So there's always a trade-off somewhere, for sure. But it depends if you want to live in the sun or not. And whether that trade-off's worth it.
Appealing.
Exactly. So just what Andre said there about going back to the car. So just explain that if you can. So how much the finance costs, and obviously you can, again, that's another offset benefit that you can add.
Yeah, so it's currently 7%. So obviously the interest rates have gone up to 7%. I'm paying financed half, paid half in cash, so 50%. Again, it wasn't that I couldn't pay it in cash. It just didn't make sense to put any more down in cash. And that to me seemed to struck the right balance between financial cost and cash flow perspective. And yes, any and all associated expenses with the vehicle, because it's a company-owned vehicle, go through the company. Need new tires, tax write-off. All the electric charging, tax write-off. New wiper blades. I had a new windscreen on the last one because I got a stone chip in it. That was a tax write-off. Insurance, so all that kind of stuff. All goes through the business as well.
So all of the electricity, presumably you run from your house and your unit. Do you charge the car at the unit, or do you charge it at home? What's the deal?
Well, so yeah, I charge it at home. Now I can charge that back to the company, but I don't bother in that instance because it's not a lot of money. Again, time to benefit, the administration work of doing that, of basically creating expense forms for me isn't worth it, because my car costs me about £40 a month in electricity at home. So it costs probably take me more time and paperwork than it would. But if I'm out and about, if I use any of the superchargers, that's linked to my business debit card, so that just gets billed straight to the business, and that's where the bigger costs are.
Definitely. Andrew's joined us. Afternoon, Andrew. I hope you are well. Andre said, without good decisions in terms to operate from a tax perspective, the first 2 years of this hustle wouldn't have been possible. Absolutely. And again, you'll make decisions based now you will not make in 3 years' time. It very much depends on where you are in your business.
Yeah, and also it's very important to decide what you want your business to be, where you want it to go. Like, for example, a lot of people at the start, they're probably going to go through a high growth phase, right? So they're obviously going to put as much into the business as they can, invest everything, and they're all about growth and sales and expansion. When you get to a stage like myself, I'm much more about stability, profitability. I'm much more interested now, having been in the business 10 years. I want my business to grow, but I'm not that concerned about, I don't want it to double turnover every year. I don't want that. I want it to be growing 20, 30% in revenue, but I want to be seeing the profitability increase and maximizing that and reducing my involvement in it, so I can do other things. That's my goal at the moment, which is very different from when I started. When I first started, it was like double turnover every year was like the absolute must. You'd do 100, then 200, then 400, and then 800, and then 1.2 million. It was all about increasing the turnover.
Yeah, absolutely. Different decisions made at different times. Sean wants to know, do you get free energy bills?
Not quite. Not quite free energy bills, no. It's not a lot though with the utility warehouse.
Yeah, it really depends on the model of the business. Again, batch treat. I was talking to someone earlier actually, and I think it's definitely something we need to talk about more, is maximizing those benefits in the best way possible, because it has an impact if you're not paying your energy bills, because you're utilizing that as part of your business. Then it means you've just got a bit more in your pocket to be able to pay, and that changes the decisions that you make in your business for certain things. So it's all connected, guys. It's all, making sure that you're making the right decisions at the right time, for sure. Andre says, I want my business to be bigger than my gurus. How much you're millions and millions and millions. So 770. And absolutely, we want that for you. 100%. I think any guru that doesn't want their mentees, is that the right word? mentees, I think it is.
I think so.
Yeah, to do better than them. That's absolutely the goal, to be able to do it, for sure. So let's just have a look. There was something else Sean said there about make sure you get your £2,000 extra in dividends before the tax year in April. The new tax year, directors can only have 1,000 tax after it's 500. Boo-hoo. I don't get involved in it.
Ben's just said a really interesting comment here. Put it on the screen. One thing we learned from previous businesses is that we treat everything as if we are big business now. Years ago, we have lost a small VAT offset because it was only a few pounds, but the compounding effect is huge once you scale. Yeah, absolutely. You've got to treat everything like you're a big business, and it's thinking like you're a big business. And a lot of that comes down to little things like I know whenever anyone's been in my training, I always say refer to yourself as we, even if you're just one person. You know, it's we are a business, we are its own entity. There is more than one person if there's just yourself, because there's you and the business. It's not just you.
Yeah, definitely. And I think that, well, I mean, I always refer to ourselves as we, generally as the royal we, because it's me and Matt anyway as well. So we're cohesive. We're sort of one person anyway. So not that we think the same way. We absolutely don't. And I'm sure you can attest to that by working with us. We think very differently when it comes to business. And but yeah, always refer to yourself as the royal we, for sure. So yeah, you've always got to make those decisions based on certain things. Any questions, guys? Let us know as we go through. It's not going to be a particularly long one today. It's more about just getting across, obviously, those in, you know, making sure that you're making the right decisions at the right time for your business. There was just something else. I'm just trying to find my notes. There was something else that I wanted to kind of bring up, because like I said, there's been a few little changes lately on Amazon. And again, perfect example as well is, you know, I was looking at the suspension the other day. Whilst when we were talking about the suspension, it's one of those things, you lose money every day affected to it. It's all relative, because obviously it'll come off the bottom line at the end of the day, and, you know, what you got to pay the tax man. But the longer it goes on, the less cool it becomes. Because obviously, you know, you could then be getting into that period of time where it's causing you a real issue, the bigger the loss. That looks like a you question from Sean there.
I just have a quick read. I think I'm understanding it. Wanted to know, will I get charged transferring 3,000 from CAP? I'm presuming, is that capital on tap? Is that CAP? To utility warehouse? Does anyone know? That's great if I can spend more. Well, so if it's capital on tap, if you draw down the funds, then you do get charged interest rates. It's only free for card expenditure. So if everyone doesn't know, Capital on Tap has a drawdown feature where you can like draw the funds into your bank account. So there is an interest charge. Yeah, Capital on Tap. Yeah, there's an interest charge, and I don't know what yours is. Everyone's is individual based on your credit score. So, but there will be a charge for that.
Ooh, I didn't know that.
Yeah, because everyone's different rates. And also, as well, the longer you've had the card, they reduce the rates as a loyalty discount.
Okay, cool. Andre said, how do you price your stock on hand at the end of the year? Do you undervalue?
No, so how you should, this is a really interesting point. We should probably do a buy box on this next week, because most people, I imagine most people who have a company who has probably set up by an accountant, they're probably the year end is going to be the financial year end, i.e. you're either going to have it, say, the beginning of April or the 31st of March, maybe the 1st of April, something like that. Most people's end of year will fall in that period. It's just what the accountants do. I think they try and line everything up. It's what they do. So at the end of the year, it's really, really important that you have to produce what's called a closing stock. So this is basically, you have to put on your profit and loss how much stock you have left in stock, because of course, if you took all the expenses off for all the stock you've purchased, that isn't representative of your true profit, because you've got stock left over, unless you've sold every single piece of stock in your business, which is unlikely unless you're closing it. So you need to put your closing stock back in to make sure your profit is correct. So what you do for this figure is you basically take the value of all your stock at either cost or sale, whichever is lower. So it will be the cost price of the stock, which is what you paid for it. Unless you can't sell it for what you paid for it, i.e. you're making a loss on it, then you put down the sale price of what it will sell for. And there's no reason to undervalue it. You should not manipulate the figures. Be as accurate as you can. If you pay £10 for something, you're going to sell it for 20. That's £10 is the cost. If you pay £10, it's only worth a fiver, then the cost is £5. There's no point undervaluing or manipulating figures, because as well, with business, you want to reduce your tax bill, but also you want to make profit, because if you don't make profit, then that could cause you other problems. Lenders won't want to deal with you. Financial institutions might get scared if you're not making profit. The tax authorities might investigate you if they think your stock is wrong and you're falsely declaring things. So make sure everything's as accurate and as true as it can be.
Yeah, absolutely. So Andre said, Sean, you could use your Curve card to spend with Capital on tap, and then go back in time to Curve and change to the Utility Warehouse card.
Yes, you can do that. Is it? I think it's free. I think it's free sometimes. I don't know if there's a charge for the go back in time thing, but I think it's free.
Yeah, great tip. Thanks for sharing that. Sean said, I lost thousands in the summer due to chocolates and heat wave. Big lesson learned for this year. So, well, apparently it's going to be the summer of, it's going to be the sign of the summer this year. So we're going to have a very, very good summer, but we'll talk about multiples and things like that when we get a little bit nearer the time. We are almost coming into multiple seasons. So it will be interesting to see how people look at that this year. Oh, which is good. Oh, Andre said, I chose the wrong words. Stock on hand is sometimes old and losing value. So what I meant to ask is, do you value your stock at year end to spot potential stock that is not buy price anymore?
Yes. So I would go through and analyze if anything is not buy price. Now, potential best practice for this is to, once you do analyze this stock that is going to basically be selling for less than you paid for it, either try and clear it before your year end, so it's off your books, makes your stock figure better. It will reduce your profit, but it will reduce the amount of stock you've got on hand and increase your cash. Or if you don't want to put it through this year, sell it at the start of the year next year. So you withhold the sale of it until April or whenever your new year is. Then you've got all year to make back that loss, because it's strategic investments. If you sell a loss-making item at the start of the year, you've got all financial year to make back that profit equally. If you want to get it off your books, get your cash up, liquidate it at the end of the year in March to do that. This is why I do a lot in the liquidation space, and I'm really busy this time of year because there's a lot of other companies are either looking to sell to me in March or April.
Yeah, absolutely. So again, something that you need to think about for sure. So, the main focus of today is, when you make these decisions in your business, to be able to really think about the consequences that it might have on the short-term and long-term effects. It's almost like a little bit of a ensuring that you have, and not every decision you make is going to be the right one, absolutely. So you can't kind of kick yourself too much over certain things or whatever, but that's, the main thought of the day. And, I don't want to over talk it too much because it really comes down to personal circumstances and things like that. So I think today, with the technical issues and everything like that, we shall wrap it up. But we will be back next week, and we'll talk about what you mentioned there, Matt. I think that would be really good to talk about, maybe some not tax issues, but strategic decisions at this time of the year.
Maybe something like year-end strategic decisions. I think when it comes to your financial year-end, there's a lot of things you can do that really help your business long-term, and these can be little things, like keeping cash in the business, paying down debt, all these sort of things. We can go into that next week. There's lots of different little things you can do to make your business look as good as it can do, essentially. Because remember, whether you're year end, it's basically a snapshot. And how I like to refer to it is if your friend comes to your house, right? Your house was probably not as tidy 99% of the time, but when that friend comes, it's going to be clean. And this is the same with year end. Your business might not be as tidy as it is, but when you've got that friend coming or your parents coming or whoever's coming around, it's spotless. And it's the same here. You want to make sure your business is as good as it can be on paper.
Absolutely. Amazing, guys. Well, thanks for joining us. We really appreciate it. If you're watching via YouTube, make sure you give us a thumbs up before you leave and leave a comment on the video if you can. And we will be back this time next week, 1 o'clock. And yeah, we will note it down to make sure that we talk about those year-end strategic decisions. But any questions, as always, pop them in the group as we go along. Thank you for joining us. Really appreciate it. And we will see you next week, guys. Take care.
See you next week. Bye.
Bye.